Welcome to Exchange Traded Fridays, brought to you by ETF.com. I'm your host, Paul Curcio, managing editor of ETF.com. And joining me at the virtual roundtable is ETF.com's blue ribbon team of writers and editors. We have senior content editor Kent Thune, senior ETF analyst Sumit Roy, contributing editor Ron Day, and financial reporter DJ Shaw. We have a lot to cover, as always, so let's dive right in. Now, as much as I would love to discuss this morning's non-farm payrolls report, we can only speculate because, well, to be honest, we record this podcast on Thursday afternoon. But based on this week's ADP report and jobless claims this morning, Thursday morning, as well as a less than encouraging beige book from the Fed earlier in the week, I'm going to go out on a limb and say that this is going to be a long, hot, and uncomfortable summer for investors with few bright spots. That said, it is my nature to accentuate the positive, as the song goes. So I'm going to appeal to the team to find the silver linings for the next few months. So speaking of silver, Kent, you wrote about the shiny metal for today's ETF Spotlight. What's the good news for investors there?
Well, the good news, it definitely is a silver lining because silver and precious metals more broadly are the one of maybe the top play for a combination of a slowing economy and potential for inflation. So a stagflation play. And now since gold and silver have both been pushing higher or resumed their push higher over the last couple of weeks, traders are excited about silver because it broke above its $35.40 resistance per ounce, that is. And so that got traders excited. And so it popped up 4% this morning, or actually I should say Thursday morning, and which far extends gold. So it's really kind of a play of, okay, maybe gold is, as the price has rushed up to an all-time high, it's still trading there, and investors are looking for alternatives to that. And plus the technical resistance passing over that 35.40 level really just had everyone pile back into silver. And so, yeah, there's a couple different ways to play that. If you can go the traditional kind of spot ETF route, that's the iShares Silver Trust, SLV. Another popular one, well, actually, I should say miners, SIL, Global X Silver Miners ETF. That one was up like 35% this year compared to about 8% or so for SLV. And I should say that's over the last 3 months. Sorry. And then I'm covering today, or publishing today, as listeners are tuning into this podcast, the ProShares Ultra Silver ETF. That's AGQ. That's a leveraged precious metals silver ETF. And so yeah, we have more of kind of the first quarter stagflationary play. Precious metals and silver is out front.
So what's the buy-in for an ETF investor who wants to get into silver? Is it a little easier than getting into gold right now? Would you say?
Well, the simple route, if you want to call it that, rather than easy, would be the iShares Silver Trust. And all these are easy entries just because they're tradable anywhere, if that's what you're asking. But SLV, that's the largest spot ETF covering, tracking the price of silver. There's also Aberdeen Physical Silver Shares, that's SIVR. Then I mentioned the miners ETF, SIL. That's going to be equity, miner space. And then I also mentioned the leverage play, AGQ.
Yeah, and I think you ask a good question there, Paul, about whether some investors might be looking at silver, seeing it's a lower price, seeing it hasn't run up quite as much as gold. Maybe there's value there. Maybe there's a catch-up trade there. And that could be what we're starting to see. Like Ken said, we broke out to a new highest level in quite a long time for silver. Actually, since 2012, we haven't seen prices for silver this high. but it has lagged significantly, right? I mean, the last time silver hit an all-time high was back in 2011. It was around $50 per ounce. It's $35 per ounce today, so still down 30% off those levels. And since 2011, gold has actually risen 80%. So silver has lagged far behind gold over the past 14 years or so. But there is always the potential that as gold moves higher, silver catches up because it is in that precious metals category. But I don't know, you could bet on that catch up play. It just hasn't worked for the longest time. I don't know what's going to be the catalyst to suddenly cause silver to catch up. It's slowly grinding higher, that's true, but there's no guarantees that silver is going to catch up to gold because gold is in a category of its own. You got central bank buyers, huge segment of demand there, and you just don't have that same type of demand in silver.
Also,
It's
the
mostly
industrial use that silver doesn't have as well. And I agree with you. It's interesting that silver does have a long way to go to catch up, but nobody did see what was going to happen in gold coming over the last year or so. So
yeah, you never know.
you
It
never
could
know.
catch up. So that's kind of like the bet you're making as you're buying here at 35. Is it going to catch up? Is it not? It's very speculative, right? Where everyone would be guessing. But I should say, so industrial demand actually makes up a lot of the silver demand. So
Good
that
point.
has actually weighed on silver as that demand has kind of been under pressure over the past several years. So we'll see what happens. It's interesting.
Staying with the metals and mining theme, Ron, you saw a bright spot for ETFs on the news that Facebook parent Meta made a deal for nuclear power with Constellation Energy for about 20 years worth of nuclear energy. This wasn't just good news for uranium miners, but also for AI companies too. So, what's behind all of the excitement over this deal and what it means for these ETFs that you wrote about earlier this week?
Yeah, investors are always looking for bright spots. Nuclear energy being kind of, just to extend the pun, kind of bright. I mean, it's
It's glowing.
yeah, it is, and so is AI. I mean, it's kind of a sweet spot. Both of these, all the uranium ETFs we track are all up in double digits over the past few months. And, looking at AI, I mean, the poster child, NVIDIA has gained 20, I just looked 27% over I think, was that the year to date or the past month? I forget, but it's, I mean, I don't know if anybody really teased out a uranium AI play just specifically, but they're both very profitable.
Well, it's strange bedfellows, isn't it, that you would think that uranium all of a sudden is so closely tied to artificial intelligence companies.
Yeah. I think it's the kind of thing that I guess if you do your homework and you're looking at those kinds of devil in the details things, you find that kind of stuff out. So, and also helping uranium earlier this year, President Trump had declared a energy emergency. One of the things he's done is deregulate to some extent uranium, make it easier to process, make it to make it easier to open up federal lands for uranium digging. So this has really added up to a very, very good year for URA, URNM, NLR, and of course, and the big nuclear Renaissance Index ETF, which has had almost a 50% gain over the past year. So an old dirty industry that's really having a good year so far.
So, in summary, so far, in looking for the bright spots for
Yeah.
the summer coming up, we see that silver is shining and uranium is glowing.
Yes, they are. And so are our puns. They're on fire.
Hey, that's what we got to do to
Comedy
entertain
gold.
our audience here. All right, so let's see. Let's move on to something a little more all-encompassing. DJ, you wrote a pair of articles on the best and worst performing ETFs in May. So again, we're staying focused just on the positives for this episode of Exchange Traded Fridays. What stood out to you in the top 10 performers in May?
Yeah, what really stood out to me in May, in the May's top performers was the ELON ETF. officially known as the Battle Shares Tesla versus Ford ETF. This fund jumped over 70% for the month, which is massive for any fund. I excluded single stock leveraged funds, so this was pretty big. And it takes a pretty aggressive strategy. It goes heavily long on Tesla and short on Ford. And it uses a mix of direct stock exposure, options, and swaps. Um, Tesla's stock was up about 25% in May, and that was really what drove Elon's growth. But it's kind of interesting, at least to me, because it came before the latest headlines around Elon Musk. So things like his back and forth with Trump and commentary on the big, beautiful government spending bill. So while these stories have been dominating the news lately, they really weren't part of May's rally. I just want to note that. But instead, this recent performance has been more about a bounce in Tesla shares, which was possibly helped by a shift in, tech sentiment and the short covering of Ford.
So DJ, what else did you see in last week's best performance that you thought was interesting?
So I noticed some other interesting things among the top performers. Most of them weren't traditional stock funds. The fund that came in the number 2 spot was QUP, the Daily Delta Q100 Upside Option Strategy ETF. This one uses a call option strategy on the NASDAQ 100. And then there were a lot of crypto names, like the VIXY ETF, which is a simplified Bitcoin strategy plus income ETF. And that fund blends Bitcoin futures with income strategies. And then a bunch of spot Ethereum ETFs also tied for 5th place. So the best performing funds of May was not just a Tesla story. It was more broadly about investors reaching for growth and volatility through options in crypto.
Thanks, DJ. All right, Sumit, this week you published your regular roundups of flows for the prior week and the month. What are your takeaways for the period, and how does it look for ETF investors as the first half of the year is closing in on us?
Strong month in terms of flows for April, Paul. We had $88 billion enter US listed ETFs, which is a very solid month. If you look at the average month so far this year, it's running around $91 billion in terms of inflow. So we were right around there. And it was across the board, right? We're seeing inflows for US equity ETFs, international equity ETFs, US fixed income, and international fixed income. So there's demand for all stripes of ETFs. And of course, the big jump in the stock market that we saw during the month of May helped with that. That's giving confidence to investors. They're continuing to invest. And some of the names that we're seeing money come into are the usual suspects, right? The VOO was at the top of the list, over $10 billion of inflows in May. If you look year to date, insane. This ETF has seen $66 billion of inflows just over the past 5 months. So we're on track, seemingly, for another $100 billion inflow year for that ETF. And I should mention, so far this year for ETFs as a whole, we've seen $458 billion of inflows. So if you extrapolate that out for the entire year, we're on pace for around $1.1 trillion of inflows in 2025, which would be exactly what we got in 2024. And that would, of course, was a record year. So we're on track for another record year. We'll see what happens over the next 7 months or so. But looking at individual ETFs, I mentioned VOO. We also had QQQ on there. And IBIT, which we've been talking about a lot, had $6.6 billion of inflows in the month of May. A couple that stood out to me, though, were TLT, the iShares 20-plus year Treasury bond ETF, had over $4 billion of inflows. Why this is interesting to me is it had these strong inflows, even though there's been pressure on the long end of the Treasury yield curve. We've seen the 30-year, it's been hovering around 5%, which is pretty much near the highs that we've seen since, the past several years or so. The top for the 30-year bond has been 5 to 5.1%. It's been sticking around there. Some people clearly see value at that level. The people buying TLT see value with the 30-year bond around 5%. And it's a very controversial part of the treasury market. On the one hand, 5% yields, they're pretty attractive. If we see a downturn in the economy, presumably long bonds, they're going to rally pretty significantly, and you're going to benefit from that. On the other hand, there's all this hand wringing about budget deficits, right? The Trump trade bill is going to cause the budget deficit to potentially go up by $2-3 trillion, and that's going to lead to a lot more bond supply, and that presumably could weigh on the price of long-term bonds. So you kind of have that push-pull, very attractive, presumably at 5%, but also you could see a surge of bond supply if the budget deficit continues to rise. So I think TLT is a battleground ETF, but we did see substantial inflows into that in the month of May. Lastly, I want to mention this one ETF called the iShares US Thematic Rotation Active ETF, ticker symbol THRO. Huge inflows of $3.7 billion in May. And I'm hearing that this is due to a model portfolio tweak on the part of on the part of BlackRock. This ETF basically had negligible assets up until May. Huge spike because BlackRock changed some of their weightings in their model portfolios. This is an active ETF that tries to outperform the overall market. I wrote about it a little this week. It has been successful, but it's not really taking these big swings or anything. It's hewing pretty close to the overall market, but it is giving you a little bit of a better return, or at least it has since its inception back in 2021. So yeah, to sum everything up, strong month of inflows for the month of May. The usual suspects are leading the way, but there's some interesting things in there as well. Check out the article on ETF.com if you want to see the top inflows and asset gatherers for the month of May.
And Sumit, I was just going to add one point that I noted, I think it was 2 weeks ago, where TLT had dropped below $85 per share for only I think it was like third time in the last 20 years.
Oh, yeah.
There was two other instances. One was October 2023. TLT climbed 20% in the 2 months following that. 2007, TLT climbed somewhere between 15 and 20% over the next handful of months after that. So in the last 20 years, roughly, that's a 100% occurrence of 15 to 20% gains on TLT after it drops below $85. So that's kind of a simple technical play. So we'll see what happens.
Yeah, clearly people are looking at those charts along with you, Kent, and that's why we're seeing these big inflows.
Absolutely.
Fantastic analysis from both of you. Thank you for that. Finally, the segment I like to call Flirt, Marry, or Kill. I'll name an ETF and the panel tells me what they do with it. Now, they don't know the ticker in advance, so this is a true test of their ETF acumen. So here we go. Ready? This week, the big public breakup between Elon Musk and Donald Trump made headlines and inspired thousands of memes online. So let's add our own ETF.com spin and analyze the falling out from an ETF perspective. First up, we've already talked about it with DJ, is ELON, the BattleShares Tesla versus Ford ETF. So, DJ, flirt, marry, or kill Elon?
I'm conflicted. I think I'm gonna go with flirt. I'll keep it around, but I won't commit.
Much like he feels about Elon feels about the women he has children with. Ron,
Kill. Too much work. Too much work.
Too much work. Yeah, you got to keep track. You got to keep track of Tesla. You got to keep track of Ford.
Yeah.
Ford's a short on top of it. It's interesting. I could see that. Kent, what would you do with it?
I think I would kill it just because it's tough to bet for or against Elon. I mean, which is the real Elon? You know what I mean? Is he a brilliant CEO? Is he a buddy of Trump, or is he an enemy of Trump, or is he just kind of like his own type of on his own island doing whatever? But anyway, too difficult to predict, so I'm killing it.
And Sumit.
I'd kill it. I think, yeah, I mean, you have all the issues with the decay associated with being leveraged ETF. The short forward kind of offsets the leverage a little bit, but complicated product, I don't think we need it. Just use the 2x Tesla ETF if you want to bet on Tesla in a
Yeah,
leveraged way.
same here. Kill it. Set it on fire. Get it out of my sight. Just like, well, no, I won't say it. Next up is DJTU, the T-Rex 2X long DJT ETF. That's for President Donald Trump. The other part of this equation, this lover's spat here. Ron, flirt, marry, or kill?
Well, you're making this a fun one because it's confusing and it's difficult. And I would only say kill from a personal reason. Like it's just too much in the weeds. I like easy stuff when it comes to investing. So this is not easy.
No, it's not. Life is complicated. So is politics.
Yes.
Some people who think they know everything are starting to find out. Kent, flirt, marry, or kill DJTU?
I kill it as well. Similar reasons as Ron. I like to understand things. I'm an analyst type, but I'm also logical, which means I'm kind of simple-minded. So if I understand it, I might invest in it. But and plus, it's really just kind of a wild card. It's kind of a toss of a coin. It could go up, down, any direction. So I wouldn't bet on it either way. Kill it.
Kill it. Sumit.
I'm going to go with Flirt on this one. This one is a straightforward 2x ETF. DJT is essentially a meme stock at this point associated with Trump, and this gives you leverage on that meme stock. If you want to trade meme stocks, this is as good as any. So it's not for me, but I think, it has a place in the market for certain speculative traders.
All right. So there's a flirt from you. DJ, what say you?
I think I'm going to go with kill on this one. I mean, I like to take risk, but I don't really like to lose money. And this one is down about 30% over the month, and just Thursday afternoon down almost 4%. I just can't see myself even considering it.
Yeah, I'd kill it too. What bothers me is the 2x aspect of it. Like you're really doubling down on something that could be, pretty chaotic. So I'm out as well. So we both agree that both Elon and DJT get the axe. All right, shot down dead on Lover's Lane. All right. That's my cue to thank all our listeners for streaming or downloading Exchange Traded Fridays. Remember, if you haven't already, please like, subscribe, or follow us wherever you get your podcasts, whether it's Apple Music, Google Play, or Spotify. If you have a question or just want to share your thoughts, join the conversation with us on X, formerly known as Twitter, speaking of Elon Musk, where our handle is @ETFCOM. See you next Friday.